Title: Balancing Profit and Planet. The crucial role of environmental impact assessments in evaluating the sustainability of investment projects. Introduction. In an era marked by a growing consciousness of environmental issues, the intersection of finance and sustainability has become a focal point for investors, policymakers, and corporations alike. The role of environmental impact assessments, EIAs, has emerged as a pivotal tool in evaluating the sustainability of investment projects. Bridging the gap between profit-driven endeavors and the imperative to protect our planet. Understanding the significance of EIAs necessitates a deep dive into their multifaceted role in shaping the trajectory of investment projects with a keen eye on environmental stewardship. Environmental impact assessments unveiled. Environmental impact assessments represent a systematic and comprehensive process designed to evaluate the potential environmental consequences of proposed projects. Whether it be a new infrastructure development, industrial facility, or renewable energy initiative, the EIA process seeks to identify, predict, and mitigate the environmental impacts associated with a project throughout its life cycle. The holistic nature of EIAs encompasses a wide range of considerations, including air and water quality, biodiversity, land use, and socioeconomic factors. By scrutinizing these facets, EIAs provide stakeholders with a thorough understanding of the environmental implications of an investment project, thereby facilitating informed decision-making. Navigating legal and regulatory landscapes. One of the primary roles of EIAs is to navigate the intricate legal and regulatory landscapes that govern environmental protection. Many countries require EIAs as a mandatory step in the approval process for significant projects, ensuring that environmental considerations are embedded in the decision-making framework. This regulatory integration not only safeguards ecosystems but also serves as a mechanism for enforcing corporate responsibility and accountability. Consider a scenario where a company plans to construct a new manufacturing plant. The EIA process would involve an assessment of potential air and water pollution, the impact on local flora and fauna, and considerations for waste disposal. This comprehensive evaluation not only aligns the project with environmental regulations but also shields the company from legal and reputational risks associated with environmental negligence. Safeguarding ecosystems and biodiversity. Ecosystems, often delicate and interdependent, can bear the brunt of industrial activities. EIAs play a crucial role in identifying potential threats to biodiversity and ecosystem health, enabling project planners to incorporate measures that mitigate adverse impacts. For instance, in a forestry project, an EIA may highlight the potential consequences on local wildlife habitats, prompting the implementation of protective measures such as designated conservation areas or wildlife corridors. Moreover, by considering the long-term ecological effects of an investment project, EIAs contribute to the preservation of biodiversity, a cornerstone of sustainable development. The protection of ecosystems not only aligns with ethical and environmental stewardship but also positions the investment project as a responsible and sustainable endeavor. Community engagement and social impact. Beyond ecological considerations, EIAs delve into the social dimensions of investment projects. Engaging with local communities is integral to understanding the potential social impacts of a project and garnering community support. An EIA process involves consultation with stakeholders, including local residents, indigenous communities, and non-governmental organizations, fostering a participatory approach that incorporates diverse perspectives. For example, in the development of a new energy infrastructure project, an EIA might reveal the potential displacement of local communities or disruption of traditional livelihoods. Armed with this knowledge, project planners can proactively address concerns through community outreach, compensation mechanisms, or alternative development plans, thereby enhancing social sustainability. Mitigation and sustainable practices. One of the key outcomes of an EIA is the identification of potential environmental risks and the formulation of mitigation measures. These measures are designed to minimize or offset the adverse impacts of a project, ensuring that its overall environmental footprint is kept within acceptable limits. Mitigation strategies can range from implementing advanced pollution control technologies to incorporating green infrastructure solutions that enhance environmental resilience. Consider a real estate development project in a coastal area where the EIA reveals potential risks to marine ecosystems. In response, the project planners might institute measures such as the creation of artificial reefs, mangrove restoration, or the implementation of sustainable stormwater management systems. These proactive steps not only address environmental concerns but also contribute to the project's long-term sustainability. Enhancing corporate responsibility and reputation. Investors, increasingly attuned to the environmental performance of companies, recognize the role of EIAs as a barometer of corporate responsibility. Companies that proactively undertake comprehensive EIAs and adhere to sustainable practices signal a commitment to environmental stewardship. This commitment not only aligns with evolving societal expectations but also enhances the company's reputation, fostering investor trust and loyalty. A case in point is the growing trend of environmental, social, and governance (ESG) investing. Investors are increasingly integrating ESG factors, including the outcomes of EIAs, into their decision-making processes. Companies with robust EIA processes are better positioned to attract ESG-focused investors, signaling their dedication to balancing financial returns with environmental responsibility. Conclusion. As the global community grapples with the imperative of sustainable development, the role of environmental impact assessments in evaluating the sustainability of investment projects has never been more critical. Beyond a mere regulatory requirement, EIAs serve as a compass, guiding investment decisions toward a future where economic prosperity harmonizes with environmental integrity. By embracing the comprehensive insights provided by EIAs, investors and corporations can forge a path that not only maximizes returns, but also preserves the delicate balance of our planet, a testament to the interconnectedness of financial success and environmental sustainability.